Overaccumulated capital, the overaccumulation of capital. What is this? Why does it exist in this otherwise flawless economic system we call capitalism? We see lots of headlines about corporate cash piles piling up to record highs, national debt, which is another expression of overaccumulated capital, reaching record highs at record pace, these sorts of things. And the instinct is to think that we're seeing just a staggering increase in corporate greed and money hoarding by the rich, and that this just needs to be fixed by taxing the rich to boost productivity, rebalance the economy, and prevent stagnating living standards. But unfortunately, there is more to it. There is a deeper problem, a deeper structural problem with capitalism itself, this overaccumulated capital that expresses itself in corporate cash piles that lay idle, doing nothing, when you would think private enterprise that is incentivized to produce by the profit motive, you'd think that they would be investing this money to produce bigger profits. Unfortunately, there is a problem that is inherent within capitalism, and Marxists call this the overaccumulation of capital. I've tried to visualize this sort of theoretically to make it a bit easier to understand. So the column with CC stands for constant capital. That's the value of capital. And SV stands for surplus value. That is essentially gross profit minus the outlay on wages. So there needs to be enough surplus value from the exploitation of labour and labour time to reproduce the existing amount of constant capital, the amount of capital value, and to expand it, because as the capitalist system grows, that entails devaluation of commodities, because when you produce more things in less time, you get devaluation. That's a basic law of economics. So what we end up with is an underproduction of surplus value relative to the amount of capital value. So we have an underproduction of surplus value and an overaccumulation of capital. Those two things are essentially the same thing. So we have an overaccumulation of capital, surplus capital that cannot be invested profitably. It cannot be invested because it cannot yield sufficient profit. And that essentially is what a capitalist crisis looks like. It's the manifestation of the internal mechanisms of the capitalist system. So this generates a crisis because this surplus capital forms a barrier to investment and productivity. But the crisis is the solution to the crisis. You need a recession to overcome this problem, because a recession is a process of devaluation. So one way the recession expresses itself and this devaluation expresses itself is in panic selling. So that makes investment affordable again because you get cut rate prices. That's evident, for one thing, on the stock market. You get panic selling of the smaller or less wily investors, and those stocks get bought up on the cheap by the capitalists or investors who can sit on larger reserves and pick off the poorer or less wily investors who are panic selling. Another way that devaluation expresses itself is in bankruptcies, which enables the surviving capitalists to buy up capital on the cheap that they wouldn't have been able to buy before the crisis, and that enables them to expand their productive capacity. They can then produce more commodities in less time, achieve economies of scale, produce more efficiently and more profitably for a time. So that process reduces the amount of capital value through devaluation relative to the amount of surplus value. And the other thing that happens is that the relative amount of surplus value rises because a recession reduces the demand for labour, which depresses the price of labour, and that raises the relative amount of surplus values. So you effectively get a rebalancing where constant capital comes down and surplus value comes up, and therefore capital accumulation, the accumulation of capital value, can resume on a higher basis, and investment rises again. And as I said at the start, there's plenty of examples of this overaccumulated capital that we can point to today. US corporations hoarding cash, which was at a very low point in 1980 when obviously capitalism needed to start reprivatizing as much of the economy as it could, and has continued to do so ever since in order to be able to produce more commodities in less time and transfer public funds into private funds to offset the falling rate of profit. Money market funds have been hitting record highs at the start of 2025, and before the 2008 and 2020 recessions, we saw a sharp rise in money market funds on every occasion. So again, it's very clear that surplus capital is arising before a recession. Then we see the money market funds decline after a recession or during a recession. And that is an example of the process of devaluation that takes place thanks to a recession, enabling a new round of investment, which just goes to show that capitalism needs recessions. There's no avoiding them. Again, large time deposits, that's deposits of over $100,000, have hit record highs in the last couple of years, beating the previous records in 2008, around the time of the great financial crisis and the housing bubble crash. And again, that's well up on the start of that graph in 1973. Berkshire Hathaway, the mutual fund for Warren Buffett, who is considered the world's most famous investor, the cash in that fund has doubled just in the 3 years between 2021 and 2024. Obviously, corporate debt as a share of GDP has tended to rise again from a low of 40% in 1960, still hadn't risen that much by 1972, then takes off to about 80% in the mid-90s, 120% by 2020. And debt, of course, is a substitute for surplus value. So this is how this underproduction of surplus value that's inherent to the development of capitalism expresses itself. US national public debt has obviously soared to record highs. It's something like $36 trillion now, and that increase has been happening at an increasingly accelerating pace. US national debt to GDP also at a record high, higher in 2021 than it was at the end of World War II. And then obviously the stock market in the US is overvalued to a point that hasn't been seen before. 200% of GDP has been exceeded on the Wilshire 5000. And whereas the bubble was known as the dot-com or tech bubble in around the year 2000, and the housing bubble in 2008 resulting in the financial crash, today's bubble, which is obviously even bigger, is now being called the everything bubble because for the first time, it includes every debt or asset class, including long-term government bonds, which investors have been piling into in the absence of profitable opportunities in commodity production, along with the fact that debt to GDP is at an all-time high, tells us that the overaccumulation of capital is not only at an absolute all-time high, but also at a relative all-time high. So it's worse than it's ever been. Another expression of this crisis is shown in the fact that expectations for income to rise are a lot lower than expectations for stock prices to rise. But of course, they will end up panic selling a lot of their stocks, and those stocks will be bought up by the Warren Buffetts and the other big investors. Then, of course, there's been a massive exponential rise in multinational profits being hoarded in tax havens. And that's profit that's not being reinvested in production. Despite the profit incentive, despite decades of privatization, which you would have thought would have enabled greater profitable investment, but in fact, the opposite has happened. We're heading towards a situation where the overaccumulation of capital as Marx says, it tends to become more formidable with every crisis. So we are tending towards a situation where the underproduction of surplus value is just way too low. With the automation revolution, this makes even more sense because, of course, the ratio of labor to capital is obviously becoming lower and lower. And just to finish on a little bit more data, this graphic from the Marxist economist Michael Roberts shows the changes in the organic composition of capital, which is just the ratio of capital to labor. So just looking at this data on the left-hand side, which considers the whole timeline here of 1945 to 2021, the organic composition of capital has risen by 40%, whereas the increase in the rate of surplus value has fallen absolutely by -5%, and the overall rate of profit has fallen by -32%. Effectively, automation is tending towards the abolition of surplus value. So we're heading historically towards a final absolute overaccumulation of capital.